The envelope arrived on a Tuesday morning. No warning, no red stamp. Just white paper thin enough to hide what was inside. A father of two in Ohio opened it while standing in his kitchen, coffee still warm in his hand. Inside was a bill for $187,000. The surgery had lasted 6 hours. The insurance card had been handed over at the hospital desk. The family had done everything right. Or so they thought. That number didn't represent luxury. It didn't represent choice. It represented survival. And the terrifying moment millions of Americans face when they realize health insurance doesn't mean what they thought it meant. This story isn't about one family. It's about every family. It's about a system so complex, so misunderstood, that even people who think they're insured often aren't protected. Tonight, we pull back the curtain. We compare every major health insurance plan in America, not by marketing promises, not by brand names, but by real money saved, real protection offered, and real consequences when things go wrong. And by the end, there will be one clear winner. Not perfect, not cheap, but the one that quietly saves families more money than any other. To understand how we got here, we need to go back. America didn't always have health insurance the way we know it today. In the early 1900s, healthcare was paid out of pocket. Doctors were affordable. Hospitals were rare. Insurance was unnecessary. Then came World War II. Wage controls prevented employers from offering higher salaries, so they began offering health benefits instead. What started as a workaround became a permanent feature. By the 1950s, employer-sponsored insurance dominated the system. And from that moment on, healthcare and insurance became inseparable from jobs, income, and power. Over time, the system grew, not simpler, but more fragmented. Private insurers, government programs, networks, formularies, deductibles, co-pays, coinsurance. Every layer added complexity, and complexity created profit. Today, the U.S. spends more than $4.5 trillion a year on healthcare, more than any nation on earth. Yet medical debt remains the leading cause of bankruptcy. Not because Americans don't have insurance, but because they have the wrong kind. So let's break it down. Most Americans start with employer-sponsored insurance. On paper, it feels safe. The premium is partially paid. The plan has a name. The card feels official. But this category alone includes multiple plan types, each with radically different financial outcomes. First, the HMO, the Health Maintenance Organization. HMOs are often the cheapest upfront, lower premiums, predictable copays, a defined network. For healthy individuals who stay in network and rarely need specialists, HMOs can work. But the savings come with a cost. No out-of-network coverage, strict referral requirements, limited flexibility, one emergency outside the network, one specialist not approved, and the bill shifts from insurer to patient instantly. HMOs save money until they don't. Then there's the PPO, the Preferred Provider Organization. More freedom, larger networks, out-of-network coverage, no referrals. PPOs feel like safety nets, but they are expensive. Higher premiums, higher deductibles. And hidden inside many PPOs is a dangerous illusion. Coverage without cost control. Families often overpay for flexibility they never use. They pay thousands more per year just in case. Money that could have gone into savings, retirement, or actual medical care. Next comes the HDHP, the high-deductible health plan. This is where the story gets interesting. HDHPs are often misunderstood, sometimes hated, and frequently misused. They come with low premiums but high deductibles. On the surface, they look risky. Why would anyone choose a plan that forces them to pay thousands before insurance kicks in? Because HDHPs unlock the most powerful financial weapon in American healthcare, the Health Savings Account, or HSA. An HSA isn't just a savings account, it's a tax shelter. Contributions are tax deductible. Growth is tax-free. Withdrawals for medical expenses are tax-free. Triple tax advantage. No other account in America does this. Families who pair an HDHP with an HSA and actually fund it often save tens of thousands of dollars over a lifetime, even when facing major medical events. But only if they understand the rules. Most don't. Employers rarely explain it. Insurers don't advertise it. And so the most powerful tool remains hidden in plain sight. Then there's ACA insurance, Obamacare. Born out of crisis, designed to plug the gaps. ACA plans changed the system forever. No denial for pre-existing conditions, essential health benefits, income-based subsidies. For millions of Americans, especially self-employed workers, gig economy earners, and early retirees, ACA plans are not just insurance, they are financial lifelines. But ACA plans vary wildly: bronze, silver, gold, platinum. The names suggest quality. The reality is math. Bronze plans are cheaper monthly, but brutal when care is needed. Gold plans are expensive but protective. Silver plans, with cost-sharing reductions for eligible incomes, often provide the best value in the entire system, but only if you fall within specific income ranges. $1 over the threshold, and the savings vanish. This is where families accidentally lose thousands by earning just a little too much or reporting income incorrectly. And then there's Medicare. For Americans over 65, Medicare feels like a promise finally kept. But even Medicare isn't one thing. Part A, Part B, Part C, Part D. Original Medicare versus Medicare Advantage. Supplemental Medigap policies. Each choice shifts costs in different directions. Some plans minimize monthly costs, but expose retirees to catastrophic risk. Others cost more upfront, but eliminate surprise bills. The difference over retirement can exceed $100,000. Medicaid sits on the opposite end of the spectrum. Coverage for the poorest Americans. It's often dismissed, but Medicaid offers some of the strongest protection in the system. Minimal cost sharing. Broad benefits. The problem isn't coverage, it's access. Fewer providers, long waits, geographic inequality. Medicaid protects money, but at the cost of choice. So which plan actually saves families the most money? The answer isn't the cheapest plan. It isn't the most expensive. It isn't the one with the biggest network or the nicest brochure. The plan that saves families the most money is the one that aligns risk, income, and usage, and leverages the system's incentives instead of fighting them. For most middle-income families, not the poorest, not the wealthiest, the combination that quietly wins is this: an HDHP paired with a fully funded HSA or a silver ACA plan with cost-sharing reductions if income qualifies. Why? Because these plans turn healthcare from a reactive expense into a proactive financial strategy. Consider a family of 4 earning $85,000 a year. On a PPO, they might pay $6,000 in premiums and another $4,000 in out-of-pocket costs every year, even if they barely use care. On an HDHP, they might pay $3,000 in premiums, fund an HSA with $7,500, and roll unused funds forward indefinitely. Over 10 years, the difference compounds. The PPO money disappears. The HSA money grows. And when a medical emergency hits, cancer, surgery, hospitalization, the HSA absorbs the shock without destroying savings. This is where myths collapse. Myth 1, low deductible plans are always safer. They're not. They're often more expensive over time. Myth 2, HSAs are only for the healthy. False. HSAs are best for people who will eventually need care, which is everyone. Myth 3, insurance prevents medical debt. Insurance delays it. The right insurance prevents it. Hidden clauses matter. Out-of-pocket maximums matter more than deductibles. Network definitions matter more than premiums. Prescription tiers can bankrupt families even when hospital care is covered. One specialty drug can cost $10,000 a month and be covered in name only. The biggest mistake Americans make isn't choosing no insurance, it's choosing insurance emotionally, based on fear, convenience, or brand recognition instead of math. Health insurance isn't healthcare, it's financial disaster insurance. And when viewed through that lens, the winner becomes obvious. The plan that saves families the most money is the one that caps catastrophic risk, minimizes guaranteed losses, premiums, maximizes tax advantages, rewards, long-term planning, and doesn't rely on blind trust. For some, that's ACA Silver. For others, HDHP plus HSA. Rarely is it the shiny PPO with the highest premium. Almost never is it the plan chosen without understanding. The system is complex by design, confusion is profitable, but clarity is power. That father in Ohio eventually negotiated his bill down to $43,000. He drained savings, he delayed retirement. He learned, too late, that the plan he chose didn't protect his family. It protected the insurer. The difference between financial survival and financial ruin in America often comes down to one choice made during open enrollment. A choice most people rush, misunderstand, or delegate. Health insurance won't make you healthy, but the right plan can keep a medical crisis from becoming a life sentence, and now you know which ones actually do. If this made you rethink your insurance, don't ignore it. Subscribe for clear, real-world breakdowns. Share this with someone before the bill arrives.